Welcome back. You're watching Investors Guide on ET now. Thank you for staying with us. Let's answer questions on asset allocation. Feroze Azeez joins us right now. Hi, Feroze. Our first question comes in from a woman investor. Archita Thakur has written in. She has a 2-year-old son and she wants to build a corpus for her son's education. Although she's not mentioned how much or whether or not she has a target, she wants you to recommend a plan that will help her achieve her goal.
See, firstly, very important to lay down your goals in monetary terms and fixing the value to it. So that's the most important aspect of trying to save for children and education for the child, because it's a very, very important goal in one's life, and that's something which can't be compromised, because that's what is an asset, your child's education. So I think monetizing it and identifying what is the kind of quantums you will need is a very important aspect. So for example, if you actually need 20 lakhs in the next 15 years, then you will have to do a monthly investment of 4,000 rupees, and if it grew at 13%, you will be actually at 20 lakh rupees. But on the contrary, if you've not monetized it and you end up needing a crore, so you would actually be making a 4,000 rupee investment and fall short by a handsome margin of 80%. So in my opinion, just make sure that the monetary objective, the goals are laid down in the monetary terms, and that will help you decide and work backwards of what's the kind of quantums you will have to actually shell out from your disposable incomes to create those corpuses. So now coming to what kind of funds you can actually choose. I would say an ICICI focused blue chip fund in the large cap category could be a good fund for you to accumulate monies over long periods of time, and in the mid cap category you can look in an HDFC mid cap. These are the two funds. If combined, you will automatically have almost about 120 stocks in your portfolio because of buying these two funds. So I think these two will suffice for the time being, and as your disposable incomes go up, creating a buffer for your child's education and child's other needs is always a wise thing to do, in my opinion.
Next question comes in from 33-year-old Avinash, who wants to invest over the long term for his child. He says he wants to be equity oriented with a portfolio and 20% into debt. So what would you suggest now? See, this is the difference between a woman and a man investor. He wants to go all aggressive. Feroze, what kind of equity funds would you recommend?
It's very, very nice to see that you have already decided an asset allocation, which is very important, because that's what is going to be the key driving force in the maturity amounts. So 80% in equity, 20% in debt. I think I'm pretty much in agreement that this is a good asset allocation from a 16-year perspective to save for your child. So that's a thumbs up in terms of asset allocation. Then moving on to the schemes you can choose to make investments. It's also very important to understand what is the kind of quantums you will require, even after factoring inflation when it comes to your child's education, marriage, and whatever you're actually trying to save up for. So make sure that you have inflation in mind and number in mind, so that you understand, work backwards, and realize how much you have to monthly invest to accumulate. Now let me name a few funds which you can actually start your savings and investment for your child. On the large cap category, you can look at a Birla Frontline equity fund. In the mid cap category, you can look at an HDFC mid cap opportunities fund, and in the debt category you can look at an ICICI regular savings fund. These three funds put together, I think 1/3 in each would be a good start point for your 16-year investment.
Last question comes in from Ramakrishna Singh, who's been investing in mutual funds through SIPs. He just wants to know if he's on the right track. He has Birla Sun Life Tax Relief 96, SBI Magnum Tax Gain, and emerging businesses. Well, he seems to need the tax benefit, and when he's investing in an SIP, he can't take that money out right now, Feroze. And also there's emerging businesses. It seems like he's on the right track. They're good funds.
So out of these three schemes, you have two equity linked saving schemes which will have a lock-in. So you will actually be having your unit stuck for about 3 odd years. But if that period is over, then there is some mending possible. Otherwise, you'll have to stay invested for long periods of time. But the other fund, which is the third fund, which is the SBI Emerging Business, is of course a fund which is liquid and which can be redeemed at your whims and fancies. So if you actually make some changes there, then definitely there is some degree of optimization your portfolio can achieve.
All right, Feroze, thank you so much for those answers. That's a wrap on Investors Guide. You can always get in touch with us. Email ID is at the bottom of your screen. But I must share with you our brand new offering from the Times Network. We've launched Magic Bricks Now, which is a 24/7 property channel. You can tune in, you can get in touch with us on the phone, ask us questions about buying property, tax, legal, anything to do with property. All of the advice and the information is on this channel. You can watch it and let us know what you think. It'll be our pleasure to hear from you. Thanks for watching.